Yo, what's going on, guys? It's your boy Mac the Trader back with another video. In this video, we're going to be breaking down a London trade Euro USD that took place yesterday that you would have been able to take advantage of if you are using the information a part of Mac Trading Academy. I'm going to break this down from top to bottom, from A to Z, going over all the confluences, the reason behind the entry, the reason behind the target, and hopefully you guys can learn something from this setup and go back to your charts, mark something up, and overall see some improvement within your trading. If you have any questions and if you're not a part of the YouTube family, what I want you to do is subscribe to the YouTube family and drop your questions in the comments down below because I'm going to be answering them specifically. Or you can always feel free to email me at trillionairemac@gmail.com, or follow me on Instagram at TrillionaireMac, or on Twitter as well. And you guys can easily get in contact with me. If you're not a part of the YouTube family, go ahead and hit that subscribe button, hit that bell notification icon to be updated whenever I upload a new video. You guys do not want to miss the future uploads. With that being said, let's go ahead and hop into a quick intro, quick commercial, and let's get right into the breakdown.
The way you move, the way you feel.
All right, so before we hop into the charts and go over the actual trade, I wanted to show you guys the before. So this was the trade here. I wanted to see price tap into this region here and then roll over to the downside. And we can see that price does do that, and we indeed roll over. So of course, I wanted to give you guys the before and after screenshots of me actually taking the trade. Now let's go ahead and hop into the charts and let's break down the reasonings behind this setup. All right, guys, so we're going to break this down, not only going over the London entry, but we're also going to go over our Asia session trade entry, all right, simply because this was a pretty good trade. And you can choose to do this on the M15 timeframe or your M5 timeframe. Now, a lot of you guys haven't seen me necessarily trade like this, but I'm excited to introduce to you guys this new form of trading that my mentorship students are definitely being able to take advantage of, because we go over trades like this on a weekly basis, especially yesterday on the Monday night webinar. All right, so we're going to start on the M15 timeframe as it relates to Euro USD. The market opened on the 14th here, right? So price opened up here. Now, we do have, however, let's go back. Perfect. Okay, so we can see here, based on the M15 time frame, that we have buy-side liquidity resting, all right, right here within this area. Here, let's get this really quickly, and let's change this back to this here. Perfect. So we can see that we have buy-side liquidity resting in the form of relatively equal highs here, right? We have 1, 2, 3 highs in the form of buy-side liquidity. Asia session starts here. Okay, the market opens up from Sunday here. Okay, and essentially once Asia session starts, we have a nice bullish move and price targets that buy side liquidity. Once we target that buy side liquidity, as you guys can see here, price reverses on us and we take out this swing low here. Now, why is this a swing low? So these two lows, okay, this low here is 536. This low here is 538. So this here is our swing low, and we have two higher lows on both sides. Once that swing low breaks, okay, we can see it breaks here. Okay, it actually breaks and creates another swing low for us to pay attention to. All right, that swing low is in the form of this candle right here. All right, right next to this swing low that forms after breaking this swing low, we can see we have an inside bar that forms here. Then after that inside bar, we have imbalance that takes place within the market. Now, the confluences that I just went over, keep those confluences in mind because I'm going to be breaking down the London trade, which is here on the M5 timeframe, and I'm going to show you guys the exact same confluences and basically explain to you all why I took this trade here. Now, this is not necessarily a part of my institutional trading plan, okay, but as you guys know, I've been developing a new liquidity strategy, especially if you're a part of the mentorship program, because I've been introducing pieces of that strategy to you guys on our weekly webinars. So here yesterday we just gave all the rules for the strategy. And then throughout this week, I'll be, introducing you guys to different setups and things like that. So exciting times. So as we can see here, we have an inside bar that forms here, and then we have some type of imbalance that forms within this candle. Our imbalance is here. Here's the low of our imbalance, and then here's the high of our imbalance. Essentially, in my case, I was looking for price to trade back into this point of interest here. Okay, right here within this area. I'm looking for price to gravitate back to that. Not only close this imbalance, but trade into the wick of this swing low that breaks as well. That was not traded into by the swing or buy this inside bar here. All right, so price trades back into that area on the M15 time frame. Pretty solid trade entry here. As soon as price taps to that zone. Oops, I did not mean to do that. I don't know why I keep hitting the space bar. Let's go back to EURUSD and let's bring this back. Okay, solid. Right, target, we were simply looking for this demand to be taken out here. 7 pips is the risk. We simply just round up 1. So let's do this. And we can see about 7.33% return would have taken place taking an M15 trade, which is absolutely, that's not bad at all. I don't usually take my entries on the M15 time frame. I usually break it down a little lower. But for those of you guys who just want to get into the market, M15 time frame is not bad at all. It's very versatile. Right, so now let's start to get into my London trade. Okay, so I was on the M5 time frame mainly because the M5 provides me enough information to where I can really break down the session. Okay. However, I don't take risk entries on the M15. The M15 is what I use to find my macro time frame points of interest, okay, if I'm day trading. So because of that, if I'm just going to take straight up risk entries, then I'll be on the M5 time frame or the M1 time frame. All right, so right here within this area, we can essentially see the same type of confluences took place here that we see here on the M15. All right, so if we start off with our first confluence, we can essentially see that price sweeps this liquidity here. Okay, so we have a relatively a high here, okay, a swing high here. Price essentially sweeps that swing high, okay, right here within this area, collecting buy side liquidity. Then we break to the downside and we take out this swing low here. Now these two lows, okay, are equal, as you guys can see, 2418, 2418. I'm simply just looking right here, okay, open, high, low, close. All right, we can see 1.02418 and then 1.02418. So essentially this here is our swing low, okay? This is our higher low here, higher low. So this is the swing low that we're looking to break. That swing low breaks here, okay, with that nice push, and we have imbalance that is also dropped within the market within the form of this candle here. This is our imbalance candle. I'm looking for price to trade back into our swing low that was responsible for the break, which is here. Okay, stop loss right above these highs here. As you guys can see, 6 pips was the risk on this trade, and then we simply just targeted. Really, my first target was going to be around 50% of this demand, simply because we can see that the top of this demand only produced us 3.12%. I was looking for possible reactions off of this demand here. However, as you guys can see, price just continued to push to the downside, right? So there was nothing really for me to target within this area. Even when we get 50%, right, we just have bearish momentum on the M5 time frame. There was no type of swing low to form. There was no type of reaction. So I simply just targeted this here, okay, for about 6.57%. Let's get that a little bit more spot on. There we go. All right, and then we can see that a swing low simply forms after we had already hit the target. So we were a happy camper in this instance. Here, let's switch back to this. Right, so we can see that, we do have a swing low that forms here, okay, but that swing low takes place after we had already hit target. So we were good to go, right? So this produced us around 6.64%, 6.63%, excuse me. So why is this important? What I want you guys to notice, okay, I want you guys to notice this pattern here. Look at this pattern here and look at where I took my entry, which is here, and then look at this pattern here. All right, both on the M5 time frame, and they're very, very similar if you look at the concepts of what's going on and you look at the imbalance, you look at the swing low that's being taken out, the inside bar. Now here we see an inside bar in the M5 time frame, which is here. Okay. However, in this area here, our inside bar was on the M15, which was in between this area here. Okay, this was the range of the M15 inside bar. I believe it was these 3 candles, 1, 2, 3. These 3 candles here was a part of our inside bar. Obviously in the range of this here, this was the high, this was the low of that original M15 candle, and these 3 candles here produced us that inside bar that you guys can see here. Let's get rid of this. And let's do this. Let's just highlight it. So then you guys can see this a little easier on the M15. And there you have it. There's the inside bar that we were talking about, right? So if you guys are able to see these types of patterns and things like that on any time frame, which is what we teach here at Mac Trading Academy, it makes it very, very easy to take advantage of the markets and take advantage of the charts, right? So this trade here produced us about 6.63% just utilizing the information a part of Mac Trading Academy. If you guys are interested in joining, what I want you guys to do is click that link in the description to start becoming a day trading scholar today. Gain access to all of my courses, all of my trade outlooks, all of my webinars, and most importantly, be able to sign up for one-on-one sessions as well as sign up for our weekly webinars and live trading, right? Those of you guys who live trade with us on throughout the week, our live trading tomorrow will be changed to another day simply because tomorrow I have to move my sister back into her university. All right, we will be live trading on Thursday, however, so you guys can expect all of that information. All right, with that being said, I'll catch you guys on the next one. If you are not a part of my free Telegram community, what I want you to do is join the Telegram bot below, because all throughout the week, what I'll do is I post my Mac Trading Academy Telegram link through that bot, and I also send out scholarships. I send out free trades. I send out trade analysis, so you don't want to miss it. Join in on the Telegram and take advantage. I will catch you guys on the next video. Much love and peace out.